Hello viewers, welcome back to our YouTube channel. We want now to proceed with where we had stopped last time with a series of quantitative techniques, and we had looked at the introduction to statistics in our previous video, and right now we want to talk about the importances of statistics as well as the applications of statistics in the real world, and we conclude by looking at the limitations of statistics if time allows, to be able to develop an understanding and be able to equip ourselves with the key theoretical aspects that we need as far as quantitative techniques is concerned. So in the previous video we said statistics is a very crucial aspect in regards to decision making, and also a planning as well as forecasting and simplifying the complex data. But it's also, as you know, whatever has a use also has a limitation. We also have limitations, and one of the limitations is that it ignores some of the qualitative aspects, and it also deals with only the aggregates, and as well as representing. In terms of its representation, it requires expert interpretation. But of course, we have to understand that statistics is a very powerful tool in analyzing trends and guiding policies. Of course, we can also understand that even though it can be able to do the analysis of providing trends or guiding in terms of policies, we need to understand that it cannot provide exact solutions, or it cannot account for certain things that are subjective to human factors. So let's now look at the importances. We dwell so much into an understanding of the importances of statistics. Importances of statistics. Importances of statistics. So we've said that statistics plays a vital role in most fields of human activity. You find that statistics does a lot of things as far as human statistics or human activities are concerned. And we have looked at statistics that helps us to in determining some of the different aspects. Like it can help us to determine the existing position of unemployment, the existing position of population growth rate, the existing position of infant mortality rates, per capita income, and other aspects within a given country. So the importances We could also call them the applications. The applications of statistics. Applications of statistics, and we know that statistics is applied very widely in the central positions in different important fields of human activities, as we've said. So these are some of the things that we need to look at. So we want to give a detailed analysis of statistics. One, we can talk about statistics plays an important role in administration. Of course, statistical data is widely used in making administrative decisions. Of course, the administration will look at it from the point of making decisions, making administrative decisions. So we want to look at it in terms of making administrative decisions. Of course, every administrator, whichever organization, whichever entity, they have sets of programs and policies which are formulated in order to meet the targeted objectives or the target plans of that organization. If it's a country, of course, it has objectives in which they want to achieve in a given period of time. And now it is at the level of a country, you'll have that the president and maybe his or her cabinets are the ones that, with all these other sectors, assisting them to achieve the overall objective or to achieve their mandate of which they were elected for to accomplish, so that you could be able to develop the different aspects of the country. So since we are going to have different sets of programs and policies that are going to be guiding us, these plans, of course, they depend on the correct and sound statistical data. So if the data is not available, they cannot be able to implement these statistical aspects. So statistics is used as a tool for planning within the administrative aspect. So they make these plans and be able to achieve them. So we, like for an organization, they can look at what we call the comparative statistical statements. We've said that for us to achieve the plans, we depend on the correctness of the statistical data that we have gathered. Different data in regards to maybe the population. We want maybe we have looked at we have done the national census or the population census, and we have seen maybe in such and such a region we have such and such number of people. So if we have a wrong information about the population, even our plans for that region or for that population will not be achieved if the information we've captured is not all that correct. And that's why we say that these administrators, they base on the correctness of the statistical data that is going to help them achieve their objective plans. So the comparative statistical statements of previous years, of course, these comparative statistical statements, they are supposed to be of previous years. Just like the example we gave for looking at how many students have passed quantitative techniques for maybe for the previous 3 years, we always look at the previous information to be able to benchmark on what might happen in the future. So if we benchmark on, if we do our benchmarking and we base on a wrong information to make projections in the future, we are going to find ourselves having wrong estimates of what the future might look like, because we based on a wrong statistical data for the previous years. So these comparative statistical statements of previous years are the ones that are used to plan for the coming financial years. A good example that we can give is, let's say, if a government needs to revise the salaries of civil servants, or what we call the public servants. If they want to do a revision, if they want to revise the salaries, if the government wants to revise the salaries of public servants, or what we call the civil servants. Now, these are the people who work in the public organizations, maybe different local governments, maybe different different authorities of the government, in different arms of the government. So you find that the government is going to base on the statistical, is going to use the statistical tools, and they are going to employ these tools so that they can be able to determine, one of the things that they are going to be able to determine is to, because they want to know how much they can put as the new salary for public servants. Of course, they will look at things to do with the rise in the cost of living. And for you to be able to get the rise in the cost of living, you have to use statistical tools. Maybe you do some survey, you do some analysis using the statistical tools to analyze the information of the previous costs of living. So this is now the information that they will use to be able to increase or decrease the salaries. Of course, most of the times, since the salaries are not always enough, the goal is always to find ways of how they can be able to increase the salaries of the workers. So you find that maybe they have been paying maybe the minimum. Let's assume maybe the lowest has been maybe earning shillings 200,000, and maybe according to the cost of living in a given area, now they are increasing maybe the minimum to be at 250. But for you to be able to do this, you need to make sure that you use the statistical tools to find out how the cost of living has improved in a given location. Of course, when the cost of living goes up, it means people will need more money so that they can be able to cater for the rising costs for their stay in a given location. The other example that you can talk about as far as the administrative purposes in terms of making administrative decision is the fact that if maybe you are looking at a company and maybe you want to prepare maybe you wanted to prepare the budget, the annual budget. You wanted to prepare the company's annual budget. The company's annual budget, of course, you are going to find that this is going to be made possible by using statistics to be able to estimate both the expenditures and the incomes. You look at the different income levels and be able to estimate how much you are going to collect in terms of revenue and how much you are going to spend. Of course, this also applies to the government. Now we are, of course, we are in the month of June. We've had some readings of the budget and what they expect to receive in terms of maybe the revenue through the taxes, through donations, and other revenue items. But we have also looked at the different expenditure line items of where this money that is expected to be collected, where is going to be spent. So all that is going to be within the administrative decision making. But all that is going to be, you make decisions based on the statistical information that is supposed to be correct and accurate for you to be able to achieve the targeted objective. So statistics plays an important role in administration. That was our first point. Then the other point of course, this was our first point, point A. Then point number 2, let me call it part B. Of course, statistics is a vital tool in economics. These are, as I told you, I'm giving them as importances and applications. So we look at how is statistics applied in real life. We've said that it is a vital tool in economics. Now, how is statistics applied in economics? Of course, statistics is very vital especially in developing and proving the laws and principles of economics. Of course, you will need the knowledge of statistics when you're assessing the economic terminologies and problems. For example, if you're looking at items like the economic growth, if you want to look at the economic growth, if you want to look at economic growth, if you want to look at things like inflation rate, if you want to look at things like the population growth rate, if you want to look at things like unemployment, if you want to look at things like demand and supply, national income, demand and supply, If you want to look at things things to do with income per capita, the per capita income per capita, or the per capita income. If you want to look at things like the GNP, and other aspects. If you want to look at the GDP of the country, if you want to look at the GNP, the demand and supply, and other stuff. So economics deals with different laws and principles. We have laws and principles, or what we call theories. So for us to be able to prove some of these theories, or to attain the understanding of the different terminologies, economic terminologies, and the problems. Of course, problems, we have the unemployment, it's a problem. Inflation rate is always a problem, where, especially when the inflation goes up, and other aspects. Like if you want to understand the demand and supply, we find ourselves using the statistical tools. We can use graphs to be able to explain some of the concepts. Like if let's say you're looking at the demand, when you want to understand the demand, most of the times we draw graphs to illustrate some of those things. Inflation, we draw some of the graphs to get an understanding of some of these economic concepts. So that's why we are saying that statistics is very vital in economics, as they help us to understand some of the economic terminologies and problems. Then part C, or the objective, the importance of number 3, or the application number 3, is that economics is very essential in business. Someone is going to be wondering, how can I apply statistics in business? Of course, we know things like financial trends, things like customer preferences. Those are things to do with business. So for the smooth operation of a business, statistical data is very useful, because this statistical data is going to express facts in a defined a defined form. So we shall have this statistical information being expressed in a definite form, and once you get that information simplified, you can be able to simplify the complex nature of business, because there are certain things that are going to be so much hard to understand, or sophisticated in terms of the operation. But the moment you try to use the different statistical aspects to analyze some of those complicated aspects of business, you get to an understanding. If you want to analyze profit, of course you are going to find yourself doing some estimations of maybe the profits that you are going to earn, or the loss you have incurred, or you might incur, basing on the different mathematical computations of the viability of the business. Maybe you try to look at if whether this business is actually going to be profitable. Of course, you use the previous information and other information to manipulate this and be able to come up with different conclusions. So statistics helps the business person to plan according to the market demands. I told you, you can use maybe customer preferences, you can base on market demands, customer preferences, and other aspects. So it will help a business person to, first of all, analyze the complex nature of business into things that can be understood by every person. Second of it all, it helps you to plan according to the market demands. Of course, you look at market demands, we look at in terms of the tastes of the customers, the supply, the price, the quality of the commodities, the demand, tastes and preferences of the different customers, and other aspects. So in this case, they help you to, when you have gotten all this information, it helps you to make a decision on whether you should invest more or you shouldn't. Because if you analyze the market demand in terms of the taste and preference of the customers, the supply, the price of the commodity, the quality of the commodity the customers want, it helps you to make a decision after studying the pattern of the events. For example, if I know the price, if I know the quality, if I know the quantity these people have been buying, it can help me to forecast sales, to forecast expenses, to look at how much am I going to spend on advertising the products that I'm producing. It will also make me as a business person to understand how much of the financial resources do I need to invest in the business based on the demand, the market demand of the customers. It can also help me to tell which location should I put or should I locate my business in. So to mention some of the key aspects that you can get after understanding the market demand by using the statistical data. You look at how these people have been consuming. You look at their income levels. You gather the information that is going to help you make decisions on how much financing you need, how much you should produce, how much will be your sales, how much will be your expenses, and other aspects. So when you lack this statistical knowledge, it will be very difficult for you to be successful in business, because business, even if you are basically looking at sales, you have to look at how much did I make last month, so that you can be able to estimate the likelihood of the profit of the sales that you are going to make in the preceding months. So without a thorough understanding of statistical tools and knowledge, you'll not be able to be successful in business. So that's how statistics is used in the area of business. Part D, I want us to look at the role, how statistics plays a central role in banking. Remember, we are looking at the applicability, how statistics can be applied. Of course, if they ask about the importance of statistics, you just rotate these same points. It's just how you explain them will differ. But I'm taking it in terms of the application, the applicability of statistics in real life situations. So the real life issues that I'm telling you about, they are the ones that you can manipulate to become the importance of statistics. Now, how is statistics plays a central role in banking? We know banking, it's all about creating credit. And basically here in banking, we are talking about, most of the times, we are going to be talking about the central bank, the central bank and the commercial bank, but mainly the commercial bank. Now, banks use what we call statistics or statistical aspects in various ways. The banks apply a principle of banks apply a principle of probability. How do they apply this principle of probability? Now, banks assume that the people who are the companies, the different organizations, the NGO, the associations, and all other kind of people, whether natural human being or artificial human being in terms of companies, that save or that bank with them, they assume that these people or these institutions who deposit their money with them, they are not going to withdraw that amount at the same time. Like for instance, a bank can have like 1 million customers, both companies and individuals. But the assumption, the underlying assumption on which banks operate is probability, because they assume that not every depositor is going to withdraw the money at the same time. Like it is very hard to say that all maybe the 100,000 customers have withdrawn their money from the bank at exactly maybe 10 a.m. On any given day of the year. It is really hard. So that's the underlying assumption they base on, that it is indeed true and probable that not all customers are going to withdraw their deposits or their money at the same time. So what happens? So by them understanding that statistical tool within the banking, they can be able to go ahead to create credit by lending out some of the deposits of given individuals to those who want it, from the surplus spending units to the deficit spending units, so that they can be able to give out loans and they charge interest to borrowers, and that interest will be the money that the bank will be receiving for lending out its client savings, because not the money that is held in the bank is not the bank's money, it's for the customer. So once you deposit your money, the bank lends it out. Actually, that's how the banks create credit. They lend out your deposits. A mere fact that you deposit the money in the bank, you don't withdraw it, the bank uses it, finance other different assets, because for them, by them lending out the money, they are creating, it's a liability to the person who has taken out the money, but to the bank, that is their asset, because you are becoming a debtor to them. You are going to be paying them money. So since banks use the underlying assumption that not all the depositors are going to withdraw their money at the same time, so they use statistical methods based on probability to estimate the number of depositors, how much they can maybe receive in terms of the deposits from those customers, and how much can they loan out. So they have to make sure that they strike a balance, that they have to make sure that they look at the deposits, they look at those that are what percentage of the money that has been deposited is going to be withdrawn. because you also need to understand as the bank that these people, they, even though they keep their money in the bank, but they can withdraw it at any time, and there is no way you are going to tell them the money is not there, that we gave it out in terms of loans. So they always make sure that the money is available, but they make assumptions on what could be the estimates of this money. Maybe these people, how much can they withdraw on a certain day. That's why you find these people, when they give you an ATM card, they always make sure that the, the ATM card has a limit. You can't withdraw using an ATM to remove any amount. They always put limits that maybe on such and such a day, or on a given day, you are not supposed to withdraw maybe 10 times a day. You can't withdraw. If it's an amount, they can say, okay, your card maybe has a minimum of, let's say, 3 million. So all those methodologies that are used to limit your access to the funds that you have developed, you have deposited in the bank, those are just mechanisms the banks use to make sure that they retain some of the money and they lend it out. Because if I create, if we set maybe a cash limit on an ATM, of course there are extensions, but if I set it maybe to a 2 million and someone has 10 million, it means on a given day they have to access only 2 million maximum. Even when someone says, okay, let me come and I increase my cash limit on a given ATM machine, or a given debit card or credit card, they may tell you, okay, you are going to, we are going to increase it today, but maybe you shall use it tomorrow. You will start using it the next day. All those tactics, they are just there to make sure that they manage your deposits, because it's out of your deposit where they make the money from. So that's how generally I can talk about banking. But one thing you have to understand is that they use they base on probability to estimate the number of depositors. They also base on that to estimate how much can be loaned out and how much can be withdrawn on any given day. This one looks at the loans, what can be loaned out. So these banks, they make a profit out of these deposits by lending out the clients' deposits in terms of loans to other people or other organizations. And on those organizations, they always charge them, they can charge them simple interest or compounded interest, depending on the period and the rate they have charged them as interest. So that's how basically I can explain how statistics is applied in banking. So the other E we can talk about, for E, we can talk about statistics playing an important role in accounting. So we need to understand how accounting and statistics benefit from each other, or how accounting benefit from statistics. So statistics plays an important role in accounting, because in accounting it is really impossible to do anything in accounting without records. And for you to be able to do good accounting or to prepare good financial statements, you need to have exact information or exact data. Accounting uses the statistics to provide the information to the shareholders and other stakeholders regarding the business liability, regarding the business performance. Of course, we use the statistical data that we have collected by recording the business transactions. We prepare financial statements, then we provide these statistical financial statements in the form of balance sheet, income statement, cash flow statements to different stakeholders. We provide these statements to URA, Uganda Revenue Authority, maybe for tax purposes. We provide them to the bankers, maybe to get cash and other aspects. But all this information, for us to have meaningful financial statements, we must have prepared those financial statements based on the exactness of the financial information or the statistical data. Those are the previous records that we have used to do business. Now, that's basically what we can talk about as far as accounting and statistical information is concerned. So part F, maybe we can talk about the auditing, the application. Now we need to understand how tax is, how statistics is helpful or is an essential component in auditing. Now, we know that auditing uses what we call sampling techniques. Sampling techniques to determine which transactions to include, whether the books of accounts have been prepared without errors. So when we are doing auditing, we make sure that we do what we collect samples. We pick out some documents and we trace their exactness. We try to make sure that maybe we can say in terms of, let's say we are going to be, depending on how the organization is, maybe how the organization is structured, we can say we are going to carry out sampling. Maybe we are going to pick cash registers, or asset registers. We can say maybe we are going to pick the inventory books. So we can be able to select, because when you are doing auditing, you can't audit every document of the organization. We carry out what we call sampling. If let's say you are auditing like bank, which has maybe 100 branches, you can't manage to have all the documents from the receipts to all the company records for all the branches, and you manage. You do sampling, you sample out some of the things. You can sample out even a branch. You say, depending on the performance, this branch has been performing poorly. Then you say, okay, instead of me looking at all these branches, I'm going to look at maybe in terms of region. In the western, maybe I pick like 4 branches. In the eastern, I pick like 2 branches. In the central, I pick like 5 branches. So you find yourself, out of the 100 branches of a given bank, you have sampled, or you have picked out maybe 10 branches in the whole organization, and those are the ones you are going to focus on. And you find that even within those 10 branches that you have selected, maybe through random sampling, stratified sampling, depending on any sampling method that you have used to select those branches, You can maybe look at the performance wise. You say those that are performing less, maybe below the average, let's try to look at their books. We see what's wrong, why are they performing. Based on that, maybe that's where we might find some of the things that are not going well. That is with the with the profession being skeptical. You have that questioning mind that if the company is doing so well, why are some of those branches are doing poorly? Is there some kind of aspect that I might find? So you base on any aspect that you have used to sample out some of those organizations, those different branches, and then you look at their financial statements to make a generalization. Like you use the sample information to make a general conclusion on the entire company. But even when you have selected, maybe I'm going to, there are 100 branches, now I'm only going to look at maybe 10 branches. Even within those 10 branches, you can't look at every information or every item or every document of their financial transaction. You can also go ahead to sample and say, okay, within that, I'm going to look at maybe the asset register. I'm also going to look at maybe the inventory. I'm also going to look at maybe the different aspects within the financial statements based on the professional skepticism or on how you have tried to do your auditing. So that's how we can talk about statistics being a helpful tool in auditing. Then the other, we can maybe talk about one other application where statistics can be applied. Let's look at maybe medicine, the area of medicine. Of course, we know that medicine deals with treatments. But of course, these treatments, you know that not every person who falls sick takes medicine and recovers. Some of them die. So we know that medicine deals with the treatments that work most of the times, or most often, that when someone is sick, it takes maybe some drugs or some tablets, and maybe the person recovers. But that's not true. It's not always the case, because there are some cases where people die even when they have taken treatments. So there are kind of analysis that we can use within the medicine industry is to make sure that we carry out what we call the treatment success. So we carry out treatment success rates, treatment success rates. And we know for you to be able to carry out the treatment success rates, you have to base on what we call the probability. Probabilities. What are chances of someone going in an hospital and recovers? So the doctors, they keep what you call the clinical records. Every patient who goes to a hospital, you find that those maybe nurses or receptionists, they write down the information of the patient, what is maybe what they are treating, and what will be the prescription that they are going to give to that patient. So they do that to be able to get information that is related to the case they are trying to solve. But now, the question that we all ask ourselves, how do these doctors know that such and such a person with such and such aspect, or with such and such diagnosis that we have done, require such and such prescriptions? Of course, they also depend on the previous information. Maybe on the previous patients that we have admitted, they had those signs and we gave them such and such prescriptions, and maybe 90% of them recovered. So they give you this. If it doesn't work, they also change the medication. Why do they do that? Because they use probability. It's not that it's going to be always right, that they just give you one kind of prescription and it works out. If it works, even if it works out, it means they gave you that prescription of the medication that you should take based on observations for the previous cases or for the previous patients that they had worked on. That's why you may find that in the prescription, they are not going to give you only one single drug. They give you a mixture that each drug is, or each tablet is going to be contributing a certain percentage to your healing. So the recovery or the success rates are going to be based on the probability. You can also look at, maybe the other one, you can also look at natural science and social science. The last one maybe you can talk about, in terms of the applicability, we can talk about natural science, natural science and social science. So such sciences include, of course, we can have biology, physics, mathematics, astronomy, chemistry, meteorology, geology, and other aspects. So these, they all use statistics to draw conclusions and describe most of the aspects precisely in order to draw conclusions, or they give a complete description of the original data. So those are the applicability of the statistics, the applicability of statistics in the applicability of statistics in real life situations. Maybe I can give, just to help you analyze some of the importances, because the other one we've been talking about the applications. Let's look at maybe the importances just briefly. Importances or uses of statistics. Those key items that we talked about, the things to do with the decision making. One of them is decision making. Decision making, of course, we've said that statistics provides scientific basis for making informed choices in business, in economics, in governance, and other aspects. So the decision making can cut across either through the through the business, the economics, or governance in terms of the administrative decisions. Then the other thing The other thing is planning. Planning, of course, statistics is very essential for both economic and social planning. Of course, we say that government relies on the statistical data to allocate resources and set development goals. When you have these resources, you base on the data that you have, maybe about the population, you'll be able to allocate the different resources based on the number of people within that area, depending on who wants what, and be able to achieve the development goals. So that's how statistics helps in planning. The other aspect, of course, the other aspect that we have is in the area of forecasting. So statistics helps us to predict the future trends such as the market demand, the population growth, the economic cycles, in terms of whether we are going to have economic boom or economic recession. So all those are going to be helped by statistics. The other is simplification. Simplification, of course, the simplification, of course, we look at converting the complex facts into understandable numerical figures. Just like I've told you, if you're looking at the performance of the students, you have to do some computations and get maybe the average, the mean, the median, and other aspects. Or you can document this information in terms of graphs, if maybe they are categorical things, if maybe they are, you can portray them into charts, graphs, or tables. Then the other aspect, because we are now highlighting them, the other aspect is statistics is important in policy formulation. Policy formulation. Of course, here we look at statistics helps us in creating effective policies by studying the relationship between different phenomena or different variables. For example, we can carry out a study on unemployment. Then we can be able to draw policies on how we can be able to control maybe unemployment, or we can be able to control inflation. So it helps in policy formulation, because you look at the data that is available, then be able to draw conclusions and then formulate the necessary policies that can be used to curb whichever problem that you have identified. Of course, you can't forget about the research. It can be used in scientific research. Scientific research, whereby it provides tools for hypothesis testing, correlation, regression, of course, regression analysis in both areas of natural and social sciences. Of course, these are some of the things. If, let's say, I want to test whether maybe a given disease can occur, we base on statistical information to draw the hypothesis or to draw those assumptions, and we make sure that a certain claim is going to be valid or it's not going to be valid. So we shall look at those statistical tools like hypothesis testing, like correlation, like regression analysis, to be able to understand how we can be able to draw conclusions based on those different tools. Then last one, we can also use statistics in banking and industry. Banking and industry. Of course, we have seen that we can use it in risk assessment, whereby we can assess the risks associated in a given entities. Maybe you look at the loan portfolio and be able to analyze the risk or the rates at which maybe a customer might default. We also use it in production planning. We can also use it in auditing. So those are some of the things that we need to understand as far as the importances and applications are concerned. So what we are going to look at is, I want us to focus on the limitations. Of course, the other one maybe you can add is comparison, because we have not talked about comparison, how statistics helps in comparison. So there is no way you are going to make any comparison without using statistical data, because you look at the data of a given period, you compare with that of another period, then you can be able to draw either graphs, numbers, and then you can be able to make the comparison. So let's look at the limitations of statistics. Limitations of statistics. Limitations of statistics. So the methods that we use in statistics, most of the times they deal with quantitative aspects. These are some of the points that I highlighted when we were starting, that some of the methods that we use, they deal with quantitative attributes of data, or quantitative variables, attributes of data, and they leave out the qualitative variables or attributes. So that's a very big challenge that statistics has, that it ignores the quantitative attributes of data and the qualitative aspects. It only looks at the quantitative aspect, because most of the formulas that we can have, there is no way you are going to calculate the mean of, let's say, the quality of the employees. There is no way you are going to use the mean to calculate maybe the sex or the gender of a given respondents, the skills, the educational skills. So some of them, we use those mathematical formulas that are not going to be applicable to areas of qualitative variables. So this means that some statistical methods are not exhaustive, because they don't include qualitative aspects. So they only take out the quantitative attributes, and these quantitative attributes, of course, they include figures, figures and facts. And most of the times, these qualitative aspects, they answer questions like how much, or how many, and they forget the other qualitative aspects which cannot be. Of course, the qualitative variables, those are the ones that cannot be expressed numerically. Of course, some of them we've talked about them, but the qualitative ones, we can also add maybe things to do with integrity. You can't measure the integrity of someone. You can't measure the honesty of a person. And these are things that are really important in business. You can't measure things to do with the intelligence or IQ, intelligence quotient, intelligence. You can't measure things to do with color. So the statistical methods used cannot bring out some of these attributes or characteristics of a human kind, and thus they become a limitation to statistics. I hope you can be able to understand that. So the limitation is that the statistical methodologies mainly focus on the quantitative variables only, and they ignore the qualitative aspects such as emotions, culture, and other kind of qualitative variables. Now, number 2, statistical laws, they only apply to the average of a given sample. Now, the point here, we can talk about the aggregate nature, the aggregate nature. Aggregate nature of statistical methods. Because we know that when you use statistics, you study what we call a group. You study group, let's say grouped data. You study grouped data and not the individual, data. Like for instance, if they are looking at the mean, maybe the mean weight of students, they can take the mean weight of the entire university or the mean weight of the entire students in the class, but they can't focus on just the mean weight of one particular student. So they always take the aggregate nature of things than the individual aspects. So statistical laws, most of the times, they always apply to what we call the average of a given sample. They always go for the average of a given sample. As I told you, there is no way you can study the entire population. If let's say you want to study the students in the whole university, maybe a university with 30,000 students, and you want to get information from each of them, it will take you more years. It will be time consuming. It will be tedious, because you are not going to find all the students at one point in time, that all the students are going to be at campus on a given day studying a given maybe course unit, because others are going to be studying, others are not there. There are those who came and there are those who didn't show up. So it is always hard to study the entire population. That's why they always study a sample. Then they make what we call a conclusion about the entire population, which is what inferential statistics is all about. We are going to look at the branches of statistics. We shall be able to understand those. But one thing you have to understand from here, the point is that they always look at the statistical laws, they always apply to the average of a given sample, but they can't come to only one point or an individual from that sample or from that same sample. So the parameter being measured may deviate from the average of the sample. For instance, if maybe you're taking the marks, the intelligence, maybe if you are judging on how students have passed a given subject, you may take the assumption that maybe they have the institute maybe has reported that maybe 70% of the students passed. But remember, these students, you have taken maybe students of, let's say, 20,000 students. That's a sample. If you are saying that the whole of these, maybe they have passed, 70% of those have passed, but you have not looked at how individually these people have passed. There are people who have got 80s. There are people who have just passed with a 50. And you are saying, you are concluding that they have passed because they are within the percentage of the people that actually passed. So the individual attributes are not going to be studied, but they are going to study the sample. So they will make a conclusion that we have registered a good progress because 70% of the students passed, but there are those 30% who didn't pass. And even if you look at how they performed individually on a given question, it will be alarming. So for you, make a generalization that since we have gotten a 70%, so we have a success rate, given the fact that there are students who even scored zeros. So that's a challenge with the statistical laws. They always study a given sample and they make a conclusion about the entire sample, but they don't look at the individual items that make up the sample. So these statistical laws, they apply to only special or specific conditions. And most of the times they can't apply universally, or they can't apply to the entire population. You can't say on average people have passed, yet there are those who have scored zeros. The other aspect you may look at maybe the hospital, and you look at maybe 80% of the patients have recovered. Yes, they have recovered, but if you look at the individual aspects, there are people who maybe died, but they shouldn't have died. But because the rate of the success rate is so high, you are going to conclude that people have actually recovered, when there are things that should be done to make sure that they save more people. So that's the individual aspect. They are not 100% right, because these laws may be true on an average, but they may not be true on an individual basis. Just like the way I've told you, you can say on average maybe 80% of the people passed the paper. So this percentage wise is not going to be reliable. it's not 100% reliable because it doesn't study the individual components that make up the sample, but they only study the average of the aggregate of a given sample. Now, the other third point we can talk about is that statistical methods cannot be applied to heterogeneous data. Heterogeneous data. They are not applicable to heterogeneous data. Now, of course, the sample is not going to be uniform in all its entirety or in all its attributes or characteristics. Like for instance, you can say I've gotten a sample from maybe a university, a sample of students from a university, a sample of students. Maybe you have chosen a given faculty, let's say faculty of business, and you have picked that this faculty is going to be a representation of the entire university. But the people who are in faculty of business, even though they are maybe the majority of the students in the university, but they don't represent the characteristics of the individual people within that sample. They are not the same. You might get someone who is 30 years, you get someone who is 21, you get someone who is 19. If maybe the individual item we are looking at is age, you get someone who is 45. But for you, I've taken all these people as if they are just one person. So heterogeneous data is data that is not common, is not the same in terms of the attributes or the characteristics. Now, the moment you apply statistical methods on data that is not similar, you are going to get wrong results. So it is always preferable that you use the statistical methods or you apply these statistical methods on homogeneous data or data that is uniform in terms of the characteristics. So here we are saying that statistical methods cannot be used or applied to heterogeneous data, and that's what always happens. Because if I come to study students and study on how they are excelling, these people excel, we may just look at their scores, but we don't consider some of them maybe are old and they can be able to understand some of the things than others. So one aspect that you can look at is, for instance, maybe for heterogeneous data, you can say, if I'm interested in collecting information about a certain tribe from a given community, I think it would be a very nice example to elaborate the heterogeneous data that I'm talking about. If we have a certain tribe, let's say Baganda, and I'm carrying out a survey to find out how the people maybe in the central region, if I'm carrying out a survey to find out the Baganda in the central region, or I'm carrying out a survey about Baganda in the central region. Now, you find that within the central region, it's not necessarily that it's only Baganda who are there. So it is going to happen that people will not even tell you. Just because you have found them speaking Luganda, you may think they are part of the community that you have come to interview or to collect information on. So you end up collecting information from someone who is not a Muganda. So you are going to get a wrong information about the Baganda. Because the sample that you picked, because someone can have a name that sounds to be a Muganda person when the person is actually not. So you end up picking wrong samples and you end up having wrong information because you picked the information thinking that these people are actually uniform, when actually they are not. So if you pick the information or you pick the respondent that are living within the central region, but they are different, they are of a different tribe, you are going to collect incorrect information. And whatever judgment you will draw out of that will also be wrong because you picked information. You are going to ask wrong audience, they give you wrong information. And that's a problem of statistics. So the other thing that we can talk about is the decision. When you make the decision, most of the times the decisions we are going to make, they have some errors. So many errors are encountered in the process of making statistical decisions. Just like from this very example that I told you, you can capture, because one of the reasons why you may end up with errors is because maybe you collected the sampling methods that you have used or the statistical methods that you have used to collect some information contain errors in themselves. So these errors keep on coming. And most of the times you can't know that did I make an error? Because for you have picked the people, you don't even know that their culture is not actually what they have told you. So these statistical methods in themselves have errors, inherent errors that can lead to wrong results. The other that we can talk about is there are some kind of biasness. We can have bias. Of course, it can come from the point of collecting information, because it might be true that you have made a conclusion on the average of a sample, but the choice of the sample from the population as a whole may be biased, because you might pick a sample that is already biased and it gives you a biased information, and you end up having a biased argument or decision. So the information obtained from different samples within the same population may give different results. You can go into a population, let's say people within the central, they are all Baganda, but you ask the same questions and you get different answers. So it is very possible to ask, you are asking the same question to the same audience. Of course, when you go, how it's going to happen is that this central region is so big. So you can decide, let's say, to pick people from maybe Masaka, you pick people from maybe maybe Kampala. They are not within the same, they are within the same population, but within different regions. So this will be a sample of Masaka, this will be a sample of Kampala. But these people, you ask them the same question and you get different answers. So it's a problem. That the overall here you might get from the entire population that maybe 70% of the central region is covered by Baganda. But what you have gotten from the individual sample is different, even though the average, the entire average is the same. Then the other aspect is, of course, how hard it is to interpret the data. We need experts for us to be able to interpret the data. Expert requirement. The information that we have obtained using the statistical methods should be interpreted bearing in mind the characteristics of the sample from which the data was collected. So if you don't have these expert people, there is no way you are going to make a conclusion. So if you lack the information, the absence of this knowledge about the sample, the information is liable to misuse, meaning you are going to end up with wrong interpretation, wrong conclusions are going also to be made. So it is very imperative that the statistical information must be used by experts or statisticians only. Because if you don't, then you are going to find yourself, if whenever you are collecting a sample, whichever sampling method or whichever statistical data that you are using, interpreting that information, you have to bear in mind that the characteristics of this sample are actually portraying the characteristics of the population where the information, where this same sample was actually collected. The other point that we can talk about as in a problem, we can talk about the information not being exact, not exact. The conclusion that we have got is not exact or unending in itself. It only provides a means of diagonizing a problem. So when I use a given method, it helps me to compute, maybe I can compute the mean or what we call the average. But when I get the average, it doesn't mean that I must stop there. I have to employ other techniques or other methods to interpret the obtained information so that I can be able to deliver the final conclusion about the identified problem. So if I get the average, it will be now on me to understand how can I interpret this average I've got, depending on whichever method I'm going to employ, so that I can be able to make judgments or to make conclusions that are going to be beneficial to the problem that I have identified in the research that I have done. So statistical information or statistics is not an end in itself. It doesn't give you the exact final answer, but it diagonizes the problem, and then you have to employ other aspects to be able to get the exact solutions. or draw exact conclusions. So that's what we can talk about as far as statistical data is concerned. So in the next video, we are going to be looking at the branches of statistics. But before we go to that, maybe we can first talk about maybe do some comparisons. You can be able to maybe have some small table so that we can be able to understand some of the things that we have discussed. Let's have an aspect. Let's generate the importance, and maybe we'll look at the limitation of what we have discussed. We pick a given item, then we make some comparisons to aid our understanding on what we have so far discussed. So for decision making, what is the importance? The importance it provides a rational basis for choices. Now the limitation is that it cannot guarantee the correct outcome. Cannot guarantee correct outcome. Cannot guarantee correct outcome. So you find that even if statistics is going to help us make decisions, or it helps us in decision making, the only importance is that it provides for us with choices of what we can do. But the limitation is that even though we can make a decision, but it doesn't guarantee that we are going to have the correct outcome. Then number two, maybe if you look at the planning, if you look at the planning, of course, under the importances, it guides economic and social development. Guides economic and social development. Economic and social development. Of course, when you are planning, we can plan things that are in financial terms that can help us to do the development. Now, limitation. For us to be able to achieve for planning to be effective, we need to make sure that we have used correct information. So this one relies heavily on relies heavily on accurate data. Then forecasting, and look at another point as forecasting. Of course, forecasting under the importance, it predicts the future. Predicts the future trends. We can call them trends. Predicts future trends under the limitations. Of course, you can predict the future trends, but the problem is that the predictions may fail. Predictions may fail. Predictions may fail under the uncertain, may fail under uncertain conditions. It's not always enough that these conditions are actually going to, these predictions are going to actually to happen. So they may fail under uncertain conditions. So they may fail under uncertain conditions. So if we look at maybe the importance as simplification, for simplification, then the importance, of course, it makes the complex facts understandable. Complex data understandable. It makes complex data or complex facts understandable. Then under the limitations, of course, we can have oversimplification. We can have a problem of over simplification. Oversimplification may happen, that we can have anything reduced to, like we oversimplify and we end up having figures that we can't even interpret. So those are the key things that we can talk about. Maybe the other aspect we can add on here is policy formulation. Policy formulation. Of course, here we can design effective policies. Effective in terms of being economic, that we design policies whose implementation may not cost us more than what we anticipate to receive from them. But of course, the limitation will be in the aspect that this information, the information, all the data might be misused. So these policies may actually fail because of the misuse of that. Misuse of data may cause failure in those policies. Then lastly, the research. Because we said it can be used in research either in areas of social science or natural science. And of course, the importance in terms of research, we can be able to do the hypothesis testing. It enables the hypothesis testing. But for us to have an accurate hypothesis testing, or we test the assumption and we prove, we either reject the null hypothesis or we accept the alternative hypothesis. All of it will depend on the accuracy of the data that we have supplied. So the results of the hypothesis testing will always depend on the accuracy of the sample data that we have fed into the system. So it depends on the accuracy of the sample data. So the moment we supply data that is not accurate, we are going to make wrong conclusions, because we are going to either commit type 1 errors when we are rejecting or failing to reject the null hypothesis. So that's where we shall start from, where we shall be talking about the branches of statistics, where we shall look at the descriptive statistics and then the inferential statistics, or what we call the predictive statistics.